Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to build from simple concepts to real-life examples in this video, but first we'll start talking about some economic data, sprinkle that in there, and see how that affects the overall markets with some market analysis. So across the pond, we've got economic data. Whether or not it will really be driving the markets, that's yet to be seen. I think the geopolitical environment's really trumping anything that we're seeing going on. That being said, though, we've been expecting to see the manufacturing sector do well recently. So that's really what we're kind of holding our hat on to see this economy get us through this tumultuous time, if you will. But Monday, usually we see pretty much no economic data. This is a bit different. We're getting ahead of it right now. So we got the PMI numbers, Purchasing Managers Index across the pond. This is from the flash manufacturing. That's when we really look at. This is the revision of that number, and coming in solidly above 50 across the board and pretty much in line with what we were expecting. So no real new news out of that one. Later on this afternoon, we get our PMI number, and it is the manufacturing PMI for the Institute for Supply Management. Institute for Supply Management's the data point that we're going to be looking at more keenly than some of these other ones that we've been getting. So keep your eyes out for that, because that's going to give you a real gauge as to what's going on here in the United States with construction spending and the prices paid for the Institute for Supply Management. One thing to note today, with a little bit lighter volume, probably because Japan, China having a bank holiday, that could really influence the direction of this market. We're probably not going to see a whole lot of volume coming into this market. And I'm kind of leaning towards a continuation of that bearish sentiment we had heading into the weekend. I talked about it on Friday. Do not jump in on Friday, as the market's probably going to roll over with all the uncertainty going on across in Europe and in Ukraine. Reason why, listen, Putin looks like, at least on first blush from the media, that he might be losing this little battle in Ukraine. And the real hanging chad here is whether or not he's going to start pushing. He doesn't want to lose, so maybe he pushes too far with using nuclear weapons. So that's been the real thing that's in the back of everybody's mind and causing a lot of angst. I don't know that we're necessarily going to see the sell-off slow down before some of those fears are lifted. So risk definitely down, or is to the downside. And folks, it's pretty much across the board. It looks like it's a cash grab across the board, because if we're seeing equities really sell off like we've been seeing, the levers and pulleys of the markets and traditional investment theory would expect to see things like gold make a move to the upside, and we're just not necessarily seeing that. So let's take a look at the markets. Crude oil, strong manufacturing. We think we would see some of this buoyancy here in this market, but even on Friday, we were seeing that sell-off happening. Crude oil, again, got two crude oils there. Crude oil, again, starting topping off Friday, selling off below the 50-day simple moving average, really getting a confirmation. Now, bonds, one of the few ones on Friday that are Friday selling off, breaking the bottoming pattern there, getting a bit of bottoming pattern here again today. Again, if equities are selling off as hard as they are, you would expect something like bonds to get a move to the upside. Well, what's happening here? We have the Fed selling assets, and they're trying to talk some of these folks that used to be buyers of our bonds into buying from us, and that's just not going over very well, believe it or not. So with that said, we're continuing to see negative pressure here in bonds, despite the fact that we're seeing the equities fall off. Now, here's where we're talking about with gold futures. Would have expected really to see some strength in gold on Friday, especially with that strength in the equities. And I have to think that if we're going to continue to see weakness here in the equities, gold is going to have to make a turnaround here. It just has to. Across the board, precious metals are going up, except for here in this market for the most part. Now, VIX giving us a little clue as to what we're going to see today. Well, continued high volatility means that equities are rolling over. Are all equities seeing volatility? come into their markets? No, I'll show you a couple where I've been talking for a couple of days now that folks need to be really concerned if they've been buying calls in some of these markets. Nasdaq, again, I think it's got to come down and test this 12,500 before we start seeing any type of strength coming out. Again, we've got a target here for the Dow Jones Industrial Average. That's 32,300, let's call it, just slightly high of that Fibonacci there. And then again, with the E-mini S&Ps breaking down below that 41,000, it's going to have to look at 40,000 before it really feels like it's kind of pushed everybody out that has the weak hands there. Find a little bit of support, hopefully there is what I'm looking for. Overnight, we did, if I break down like something like the Dow Jones Industrial Average, we can see one of the things with the Dow Jones that I wanted to chat about real quickly was the overnight, we were seeing some strength here, and Dow Jones was actually up about 200 points overnight and starting to see that weakness seep in here heading into the day session. So that is not a good sign right now. We do have a little bit of economic data that could give us a little bit of buoyancy here, folks, but I think that overarching theme here is a cash grab going on. And one other thing I wanted to do real quick is look at a couple of markets here. Even the markets that were looking like they were finding a little bit of a bottom are starting to roll over as well. We can see it doesn't matter what it is across the board. We're seeing weakness, whether it is consumer staples or the manufacturing, construction, things like that going to Netflix. We're probably not going to see any strength there. We've already seen their earnings and they're not doing so well. But we can kind of even click to staples. Again, back to things like Kellogg. Nothing really finding any type of bottoming pattern that we could even look for confirmation today. It's just pretty ugly. So again, while I haven't been super active trading right now, it's because I want to wait for some type of different directional change. We've been in a bearish move here. I'm looking for bottoming patterns to start selling some puts to take advantage of this high volatility. Now, some folks have done very well with APL. With Apple. But one of the things that I've talked about here with Apple, folks were buying calls this past week here, trying to get this pop there. Well, they got involved in buying calls with really high volatility. And this is one of those times that actually they might have gotten a little bit of a pop in volatility while they were buying those, not following what I would say is a rule, would be looking to sell option strategies to take advantage of this bullish move. Now you can see the last couple of days, volatility really coming out of that. And today, those folks buying Apple calls that I've been using as that example are going to wake up and really feel some pain here as volatility has come out quite dramatically. We can see it's come out about probably at least 6 percentage points. So probably a pretty devastating deduction out of those premiums from that massive drop in volatility. I'm going really into detail as to what I'm kind of brushing over here in this video on our Cracking the Code to Trading Options webinars, folks. So really seeing some dramatic moves here in volatility coming out of Apple, even while it's starting to roll over there. That is not a good sign for folks that are holding calls, lowering value due to the deltas dropping, and then on top of it, it's exacerbated by volatility coming out and those premiums really cratering there. So keep your eyes on anybody holding calls out there. Keep your eyes on the volatility for that underlying. We're probably going to see some volatility rolling over here a little bit just because it's been so elevated already. I don't really see us getting volatility spikes much higher than where we are right now on this little press down. If we get this press down to those levels I'm talking about, could see a little volatility elevation, but I think we've seen the spikes. All right, that's all I got for you guys. Hope everybody had a great weekend and get you prepared for the trading week ahead. All right, can't take that, take it easy.